Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Alrighty, should be good to go. Happy Friday. Who's here? Who is here? Friday's really small. There's more people midweek. I guess that's understandable for the Aussies. All right, so let's just do a little recap again, and then we'll get into the ideas. So we've had quite a lot of movement already because we had some. Just bring it up. So today's a day to be careful. So we had retail sales already, 7 o'clock, came in flat. No real news now. So no scheduled news anyway. Today, I was just chatting to the guys before we started. Oh, hey, happy birthday, Sarah. Gosh. I remember this exact day. I don't remember exactly the day, but last year, it was your birthday as well on the stream. I meant on the stream. It fell on the stream day. Didn't you have a birthday last year? What's going on? Okay. So we have importantly on here. So today, so if we look ahead to the week after next, May the 1st, we have the FOMC. So that's 11 days away. That means that 10 days before the FOMC, it's Fed blackout. So today's the last day that we can expect to see Fed speakers, and then there's no Fed speakers all of next week. We've had some news overnight, as everyone will be aware. Gold spiked up, oil spiked up, equities spiked down. So this must be fear, uncertainty, or doubt. So it wouldn't be hard to find what caused that. So there's a bit of a weird one. We had Israel send missiles into Iran, a place called Isfahamel, something like that. I'll probably butcher the name. Anyway, a strange one because they sent missiles. Israeli missile strike site in Iran. Iran went. No, sorry. Fear commodities went mental, But then we had just all this kind of like not the typical response that you would expect. Iran sort of just said, no real damage. We shot them down. So is it missiles or is it drones? That's what's really uncertain. Someone said, oh, did the nuclear facilities get hurt? And then nothing. That's what really went sent things going crazy. But nope. There was no attack on Iran's missiles as well. Iran's air defense system activated. Isfahan. Sorry, I said Isfahan. And then there was no real response. They just kind of talked it down. So what we saw was a bit of a recovery. So yeah, it'd be interesting to see. It's a bit weird time as well. They sent it at like 5 something in the morning, Israeli time. So yeah, it's kind of a tricky one now. That what do we want to keep on going with the fear narrative? Probably. I'd say that gold's going to probably hold its strength. Let's bring up the 4-hour chart. It's gonna hold its strength, but it already has done a. The thing is, it's already done a grab up into these 2410s area again, which was lovely if you had long golds. I had long golds, but my target's higher, so it's just come back again where it basically started. But now what's going to be really interesting is to see if we can start to build. If we can start to build, and then we can start to fill this wick again. Because all it's going to take is Iran to say that they're going to retaliate again. But so we'll see. If that happens, then yeah, gold longs makes a lot of sense. Do you guys ever see that movie, The Prestige? Hugh Jackman and someone else, and how it all starts with like just one thing, and then it's just constantly getting back at each other. But every time they get back at each other, it's a little bit bigger, a little bit bigger, a little bit bigger. I wonder if that's going to be something, or is it going to? Are they just attacking each other? They're not really attacking each other. That's the thing as well. They're like sending these little attacks that they know aren't really going to cause much damage, but it still seems to be showing that they're not going to be bullied, either of them. And they've got really two conflicting, we're not going to get political, but pretty hard when you've got this Netanyahu. I always think Yahoo when I say his name. And Iran, like ideology, whatever the word is. Gosh, it's too early. They're, oh, serious? Where's that? Where's the mute? Oh, Ty said on the YouTube that there was no sound, but he, I think it was his side. Iran are denying it. Yeah, it's a bit strange. It's all very, very strange what's going on. Anyway, the both views of the party. Israelis right wing, really, really right wing side just don't really clash with. Don't gel really well with Iran. So who knows what's going to go on here? Either way, it's going to, all this tension is going to prop gold up. It's just, we'll have to see. We'll have to see if it's just going to go straight up, or is it going to have like a little leg down first? I imagine it just keeps on pushing bullish. The sound is still on mute. Are you sure, Rob? Yeah, I think it's your end, Rob. Yeah, no, getting all thumbs up for the sound. Yeah. Cool. So it's an unusual response for this gold. All the way up, all the way down. Looking at the equities, Germans almost made a full recovery as well. Drove down, and now we're basically back at the start again. So yeah, I mean, still, no matter what, there would have been algos calculated there that if it does push down, there would be a lot of like just from like I missed it because I was asleep, but systems that have really algo generated models, which would be keeping an eye on the news and reacting to what happens with the news, would still also look at these kind of levels as profit taking as well. So no matter what the catalyst was, there's already been a big move, and no doubt people have capitalized on that, or firms have capitalized on this. So it depends now is whether that those models, once it hits a specific point, have they picked up liquidity buy orders now? If it's picked up enough liquidity, then it doesn't matter what the catalyst is going to be. They're going to be looking for price to, like, it could easily rally all the way back up before going down again and just stay within this channel, right? So it's, yeah, no doubt at some stage, if nothing, like, unless we turn back to an optimistic model, and I don't think that will happen today, but could be wrong. It's more likely that the stock market starts a recovery and that the big boys have picked up a great little buy order, and they might think, if all these systems, if all these global concerns and whatnot all line up, then they might think that a fair value price would be like here, unless it gets even more conflict. So they've already pushed down with that news and picked up orders, and that now if rumblings keep on going and people thinking, oh, you know what, normally the stock market really suffers when there's global uncertainty, they might have already calculated that, look, this is worst case scenario for current systems. Now, unless there's a step up and a lot more aggression, if it's going to be these like tit for tat little attacks, then this was the impact already done. But now that the rest of the population start to catch wind of all the news, they're always a little bit behind the eight ball, and that because that's going to add a lot more selling pressure from retail. Maybe the big boys have already got their fill, and they can just like keep on filling their order, filling their positions, taking these supports, these sellers, and never actually be able to break price down another leg. Then when we potentially start getting some good corporate earnings coming again and profitability, which will start to, be a bit more of a tailwind for stock market again, then that could be the catalyst for them to go from liquidity to liquidity. And that people that are reacting to this news, the move's already happened. The move happened almost instantly. And you don't normally get V-shaped recoveries. You really don't want to take, you usually don't want to take sells when you have an aggressive pullback like this. Normally a sell from if this is the area that broke support and made a new low, you typically want to see a much slower recovery for it to go down again. You don't really want to see price go boom and then all the way up in a V shape, because this could, something's quickly reversed what happened here. So it would have been much nicer to see price shoot down and then sort of stall here, and then start to, if it's going to sweep down further, people jump in for sells, breakout sells, and then you see this sweep, and then you'll see price sort of make its way back up, and then it will drop again. But it didn't do that. It just came down and then straight back up again. So price action-wise, if enough liquidity is being picked up here, that's just going to go to some other liquidity place to drop it off. So it's tricky. Thanks, Rob. Yeah, it's really, really tricky when it moves so much. Anyway, I think gold is still a safe bet for longs. I just don't know about the stock market because we've got a mix of stock market greed, the stock market not being the economy, and next week, if we get some really positive earnings, they can quickly reverse. And they've just used that news that come from these attacks as an opportunity to drive price down and then grab their orders. Because now a lot of people will be looking for sells. So you can imagine that there's probably not, do they really need to generate sell side liquidity or selling liquidity if there's already going to be a bunch of selling liquidity? So normally, like this is what I was saying in that message I put onto Discord yesterday, is that for this London session, what we've been seeing is London typically generate a lot of liquidity in their session. So why it moves down so slow, a lot of the time we used to get a London sort of do a liquidity grab at the start and then push and do like a little sell to buy move. But lately that sell to buy move has been really delayed. And what it does is it pushes down, creates like a little consolidation, pushes down to a lovely little area. This one was nice because it was the Asian low. And then we saw a little bit of a recovery. But you've got to take profits after like 30, 40 pips in London session lately because it just doesn't seem to have the same follow through. Then it just keeps on making its way down and up in this London session for like people taking sells. Now, seeing like a bit of a double bottom, triple bottom put in, still more sell side liquidity being built up, price breaking through, sweeping all this liquidity is underneath this triple bottom. For any buyers that came in late London Open, being swept. Sellers now thinking that the trend's going down. Price pushes up, little breakout. People taking the breakout buys, expecting price to recover now. Price does one more sweep all the way down, stopping out people that took buys in this area. And then once the actual manipulation's been done with these candles, these ones here, now it only makes sense that once this has all been done, price has swept down, you've got all this liquidity that's been built up and generated during the London session. Now this is just, it makes it a real clear target that price is going back up. Once you're patient enough to wait for that sweep, it makes sense for the euro high liquidity to be taken, which is exactly what it did. But the play that we normally see quite quickly during London Open literally took hours for them to generate all of this liquidity, and then they just took it all in New York. That makes sense. So took it all. It's funny how you get the timing that this whole move ended right here. And what time is this? What time of the day is this? No, NYC's earlier. London close. Yeah. Oh. Yeah, that's your Dutch kind of later getting closer. That's why I think it's getting closer to the Dutch time for the close. But NYC did the liquidity grab, but not to be confused that when I've got my London session, this pink zone, we know this is not London session. This is just London Open. The London session actually does go to like 4, 5 o'clock, depending on like, about around here. This is like the London close period. Oh, I've got a visitor. Hold on. So this is the London close period. So you can see like London have also, you've got New York opening with New York volatility, but London have set everything up And then towards the end of the day, they've been like, boop, take all of that liquidity that they generated. So it's really nice to sort of, it sucks when you haven't picked it, but it's lovely to see how the mechanics work out. Now, as long as you finish each day with a win, as in you win something, you've made some sort of growth. Might not be an account, might not be a, oh look, gold's on the move. It might not be a victory in terms of like making profit, but at least like try end the day with understanding what happened. That makes sense. So as long as you like learned something or made something, even if you have like a crap day, if you can reflect on it, even if it might be like personal actions, try like see like where you can improve on your own personal levels to say like, you know, at least I learned something today. I learned like maybe it's a weakness of something I did. Maybe it's timing, analysis, impulsivity, not taking profits too soon, misreading the charts, or even just understanding how they set it up. Because the same thing happened on Wednesday, didn't it not? We've got Euro made a little low, and then London just pushed up from there. So it's the same thing as what, if I can squeeze both of them together, Euro made the high, and then London just pushed down, and London made the low. Sorry, Euro made the low, and London pushed up. And it wasn't until like London close time where they started coming back and sweeping all the liquidity that they generated in the London Open. It's only been one day, the last 10 trading days. My singer's back. Where prices, I think it was, not even this day, where was it? Friday. Friday was the only day in the last 2 weeks where price has actually gone up first, and then after going up for a period of time, came back and took the low of the current London session and extended it down. So maybe we'll get like some Freaky Friday business, but I really want to explore this further on the study session tomorrow about how London's been generating all this liquidity. Oh, I kind of did nothing on Tuesday. And then it just sweeps it later in the day, because it should really help us. Whilst these scalping sessions haven't been as fruitful as they've been in the past, it's been a bit annoying, kind of catching. We've been getting like little moves here and there. We haven't been getting like the 50 plus or 100 plus pips, because London's been a little bit inconsistent, because it doesn't do that little sweep initially, which I was kind of hoping for. It means that sitting here, watching it, spending the time, watching what price is doing, we should be able to set up a swing opportunity and say, look, price has never really done that little correction. And we know that if Euro goes down, London goes down, New York is going to sweep and have a pullback. We know it's going to do that. So whilst we watch that and we set up our levels as above and below current price, it can then say like, well, I'm not getting the scalp entry I wanted, but now I can see some levels that I think there's a good chance that, based on higher time frame liquidity, I'm just going to put an entry here. I'm not going to worry too much about whether I get the entry to the pip. I'm going to give it a fairly healthy stop loss. Going to set a logical target. I'm just going to let time take place, and then just not look at the charts. If it wins, it wins. If it loses, it loses. That makes sense. So I do want to transition more to, I've been saying this now for a little bit, and also back on feedback from students as well, is that we should focus more on these swing entries later in the stream, especially when we need to adapt to what the market's doing. The market's changing on us. Get into the second quarter of the year. The scalping sessions, the moves haven't been the same as they've been previously. So I just need to adapt with different market conditions. Cool. So gold, Des Steps, you're in gold. Very nice. Yeah, I kind of wanted to stay away from equities. The equity is a little bit dodgy. How wise is it having a buy limit order at the 15-minute FVG, SL at the swing low, maybe target a 1-to-1? Swing low, which one? Asian swing low? Or Euro swing low? Yeah, I still got that one going, Des. Euro swing low. Yeah, I don't think it's a good idea having a buy limit here. I think having a buy limit under here is, look, it could wick and grab it, but if it closes below it, we'll go downtown. And then the ranges now get a little bit scary because here down here is 100 pippers. Okay, so we've got London Opens already upon us. This is really rough. Really rough having because this is my support that I had, and then I had this support down here from ages ago, and like I didn't even consider that I was going to get hit. Same for NAS. No, sorry, German I added. Go on. Oh yeah. Oh nice. That's why I don't delete my orders. Sorry, not orders. I don't delete my if I have analysis down low, like down under here, and price gotta wait for it to load. There we go. So if I've done analysis and it's moved like this area, if I zoom in on this area, you'll see one of the trade ideas we had from back in February. That's still here. It was that. This is what I was hoping to see in this New York session, was price pushed down into my buy zone and then play out. So I just left it there. Sometimes I'll clean my charts up, but I usually leave all this stuff here because I know when it finally does get down to these zones, you've already done the work. It's just sometimes it takes a long time for it to come back down there. Yeah. Yep. A zone's a zone. What indicator for sessions are you using? This one's a member coded it, called Gym Sessions. But the same style one is one called Lux Algo Sessions. This one by Lux Algo. That one there is good as well. So that's available for free. Gym Sessions. We coded it for this group. It's just got a couple of extra little things that features he's added. Alice, morning. The rejection wick looks good with FEG shorted from there. German 40. Oh yeah, sweet. Yeah, I'm not too keen on this at the moment. I'm much prefer gold. Gold with this uncertainty, this fear in the market. So I wonder if we can, I'd love to see price pull back here and then grab an entry and then aim for up here. I'd love to see that. But if it breaks, if it breaks up, I wouldn't be surprised seeing a candle at some stage wick down to push up. Hence why I kind of want to see this this pullback now. Got like a little FVG here. You got clean candles above it. Which breakout? Like this one? And it broke up. Oh, you took some profit, did you, when it pushed up? Or the above here? You're talking about this one from 85? Oh, okay, yeah. Yeah, I was a little bit concerned yesterday. Not yesterday, sorry, the day before, because I've got an entry running still from here. Still just haven't touched it. Haven't managed it anything. Running up, so it was good. Pullback's good. Survived the pullback, and then this one. It was really bizarre what happened in the last like 5 minutes before literally very strange what happened over here just before the market closed. We had like 100 pip drop, 200 pip drop, sorry, literally just before the market closed. 170 pips. Very strange what happened just then. And then it fully recovered. And I thought, oh yeah, we're looking good. And then last night did the same thing. Was pushing up, and it was like literally the last couple of hours, price dropped like another 100 odd pips. Doesn't look like much, but it's about 80 pips. And then we saw this boom. So I'm expecting price. I'm targeting 2,500. Which would be nice if it got there sooner, because you're paying a lot in swap fees for longs on gold. And the longer it takes, like it's the least of my concerns. But it'd be annoying that imagine if it came all the way back down and then up. So you pay all the swap fees, mega profits, and then got nothing to show for it. Stop loss is way down here though. It's underneath this swing. So I don't see price with all this global conflict going. I don't see price getting back down to like 23.20. I think there's higher chance we get to 2,500 than 23.20. But crazy things can have happened. Let's keep an eye on this. I'd love to see like a little wick up. And then close just below. And then next candle, we'll just jump in. And then we can see price hopefully do something like this. And we'll just target for the scalping session, target like this range, target like this area. Just want to see price have because gold's a beast, and because we're playing with such big ranges, which is not ideal. Even a pullback, you're going to have to give it like 50 pip stop loss at least if you're taking a breakout, which sucks. Okay, so probably going to focus on gold this morning. I really don't like what the equity markets are doing. So you can. All right. Can we give this a shot? 15 minutes just opened. Kind of want to see wick fill and then close above. So a little pullback. It's a dangerous area because it is a high across here. I want to see if some momentum can take place. Okay, first trade of the morning. Watching gold to see if this. Yeah, I'm gonna give it a crack. Target 299, 2399. So what I want to see is I want to see this 15-minute candle start to flip bullish. Doesn't have to do it in this one though, because I could survive for the 30-minute candle to close. If the 30-minute candle is starting to I don't mind if it comes back down a little bit, but if it starts closing as a strong rejection, then I'll close this guy. But I'm prepared to wait for the 15-minute bearish. Ideally, it just goes, so there's no stress. But I could get around just letting this 30-minute candle close with a top wick, and the next candle, as long as it's still got that pressure there, start to fill that wick. And once we get above here, then I think we can get a lovely move. So it's not the first break above, like here on the 5 minutes. It's not the first break that I want to get the breakout. I hate taking breakout trades. It's the second break, which I think is going to be a good move. I'm just trying to anticipate that break. Go low risk, because I want to give myself opportunity that I can add again. At the moment, Annie, my stop loss is way out of the way, so I haven't even got my stop loss in at the moment, because I don't want it to. For example, I'm protective about this little zone. So my entry exactly is 291.2. So my entry is here. I'm targeting this zone. I am anticipating that I don't really want to. I'm happy to see a wick here, but I don't want to see candles closing inside of this bit, and I don't want to just get wicked out. So at the moment, my stop loss, if you've got to put one in, just put it way out of the way. So it's out of the way. I'm not worried about the stop loss, because what I'm going to do, I'm just waiting to see what it does. So the size is very low because I hate taking these breakout trades. But what I can do is I can always add more. So for example, let's say for this, I'm doing like lot sizes. So I'm not thinking about percentage, but let's say that I'm going to risk 1% on this idea. First entry, I know taking breakout, it's a very low probability. So I would be risking like, say, 0.25% on this idea. And I'm going to keep the rest of my margin that I prefer to risk on this trade. If price does something that I like, I'd prefer to add to it rather than go full 1% at an area where I think is very, just it's a dangerous area, because you're going to have to think about pullbacks. And pullbacks happen a lot, especially in the London session. So I'm not going to let it get down to here. I'll manage my trade across if it's doing something I don't like here, but I don't want to get like one candle that just goes boop and wicks me out. So at the moment, stop loss is, At the moment, I don't want to see price really drip into this area too much. I don't want to get comfortable here. Let's put it that way. But I also don't want to get stopped out. I'd rather sit in a bit of drawdown with low risk than be taking loss here, then enter, take loss here, because then my psychology will be like, oh man, I took 2 losses before getting the move. I'd rather just have very low position for my first position and then just sit in a little bit of drawdown first, because it'd be unrealized. Long as that, like, the important thing is that you're not going in on this trade with big lot sizes for your account. That makes sense? Like, be in it so that whatever happens here, you're comfortable with. But I really want to be part of this when it breaks above this wick and to get above here. So I want to see this 3-minute candle close, to be honest. Could I be prepared to scale in a losing position? Because this candle, this one, has a lot of volume. So whether this next candle pulls all the way back down, all the way down to like here, I'm still not concerned. I'm still not concerned that if price is coming all the way down to here, what I'll do is I'll just think, yeah, the breakout, it pulled back a bit more than I expected. I'll add another position and I'll have averaged out my position a bit better. So I've got a bit of a better entry. Mentally, it's better than taking a loss before catching it. And then because you take a loss, it's very likely that you might miss the move because of those 2 losses. So like mentally, it's kind of, I'm just giving myself a huge margin of error because we're playing with massive ranges for this session. Yeah, that's it, Tom. Might come back for the 5-minute. Like, it might fill this whole area before it goes long, which is then it's really annoying because, do you get in now and miss the move, or do you wait for it to pull back and it doesn't pull back and you still miss the move? So I find that first entry for the day, it's better to go very low risk and then just be in it. try not to overthink the for first trade of the day, especially when you're a little bit uncertain with the amount of volatility that we've got. Don't overthink the entry too much. Just make sure you keep low risk. So I really want to see this 30-minute candle, and like, you know, ideally your entries wouldn't be like in the middle of a range. Like this is technically a range now. So are we going to like bounce up or down and up, and just the intraday volatility that you get? It's very unlikely that whatever entry you get can get all the way up to your target unless we get like volume breaking above here. It's unlikely that your entry will be left untouched for the remainder of the day. So I was saying to someone last night is they trade they always trade like early in the day, as in like Asian session. And most of the time, if you're taking a trade on whatever pair it is, let's just say Euro Aussie was the example, whatever entry you get in like the middle of the Asian session, because it's around like 11 a.m. Aussie time, that whatever entry you get in here, if you're holding it for the rest of the day, it's very unlikely that you're like, you got to be really lucky to just happen to have caught the absolute low of an Asian session and then not had that low swept. So at some stage you got to think, do I just want to get like short-term profits, or do I want to have like a trade that, because he doesn't watch it much, watches it a little bit in the London session again, but then it goes to bed and then comes back the next day to see how this position's surviving. And that position, most of the time, if you say you move your stops to break even before you go to bed and there's some profit, most yeah, if you're using large lot sizes and you're trying to like get the timing for the breakout, then you've got to be pretty, like, you have to be super patient. And I'd say the high probability of a breakout would be once it's breaking above this wick again, then go for it. Yeah. But if you're just trying to say like, well, I think as a daily target, I think this makes sense, then it doesn't really matter so much about it. Well, it does matter when you're entering, because ideally you'd want to enter from the best place possible. But if you're going with large risk, you can't afford to have a big stop loss. So you're better off just keeping your stops really tight. But that's a different way of trading as well. Mm-hmm. Yeah. Come back to here. I'll probably add to it if we come back to this bit, and then look for the breakout. If we can get the breakout, if it's taking this candle, then I'm not really interested in holding this one for this position. But it's very small, as in like not using too much risk at all in this. What's German doing? Tough watch old German yesterday, wasn't it? Had good movement at the start, and then we had like most of the stream was tied up inside of this, which is freaking crap. All right, so guys, give the stream a like if you can. While we're waiting for this. It adds to the good vibes for this. All right, 30-minute coming to a close. Now, look at this. Imagine this 15-minute candle. 45-minute candle, sorry. If this candle closed something like this, I would expect to see the next candle fill this wick. Okay. Added another little position here. This position. And just make sure that whatever lot sizes you're normally using, if you're using fixed lots, dial it down dial it down a lot, because we're playing with something that's already moved 400 pips in the day. So this is like, let's put it this way, this is probably like 6 times more volatility than is typical in an Asian session. So my lot size is like 6 times less than normal. So I'm not worried about pips. Say, oh, I'm 100 pips in drawdown, because I'm 50 pips in drawdown on my first entry. You're playing a huge range. It's all relative to how much things are moving. So 50 pips in drawdown would be like equivalent right now. Not worried about it. If it starts breaking it down under here, look, I'll probably take a loss and it'll equate to the percent. But what I want to see, visualizing, is that we can fill this wick. And then the second break is pulled back more than I wanted it to. I wanted it to be a nice, easy position where I didn't have to scale in. But if we can fill this whole wick now and break higher, and I got no doubt that we'll attack 2400 again. Yep. Shanghai. Yeah. So that, like, the futures, like speculation only. Yeah, okay, that makes sense. Yeah, it's not just the futures of it. Yeah, so what they want is it all comes down to the weaponizing of the dollar again. So if you hold, because you can have exposure with when Russia and Ukraine kicked off, and the US, this is my understanding, and the US weaponized their dollar, confiscated Russia's assets, because if you're a corporate, like, you know how like we go to the bank and then we get say like 4 or 5% interest on what we own, the bank has to pay that, and they've got to invest in something else that's going to give returns, and it sort of just keeps on working up the ladder. But what if you are the people that, like, you're the liquidity provider for the world, and you have an ability to print whatever you want, for you to make your own investments, who do you go to then to grow your assets with money, with something that's basically worthless? So for you, not for you, but for like the big, like say the US owned something, and or you gave money out and someone defaulted on what they pay you back with, you keep their assets. So what's going on here is like you get countries that can't, like say Russia can't just go to a bank and then say, we're going to put our money in that bank and get like 4% interest, because the bank needs to make 5% interest to pay 4% interest, and they keep the difference. So when you've got the biggest, look at this 45-minute candle so far, hopefully we can just do straight wick fill, and that the first entry is offset by the lower entry. Say you've got considered some of the safest assets is owning US treasuries, and US treasuries at the moment are paying like, close to 5%. So that's great returns if you're a country. So if you're, especially if your own currencies devalue. So say you're the yen and you're battling with inflation, you can keep your interest rates very low, down at like, for what's nearly 20 years or so, it was down at 0%. This is going to devalue the yen. So what the government can do is that they will print money in the form of like government bonds. Then what they also do is that they'll print yen and they'll purchase US treasuries that are paying 5%. Or whilst the yen devalues, but you're still holding US dollars or something that's good as US dollars, your assets will be going up, and these things that you own are considered assets, But this asset as well, if you're owning these US dollars, they can also be confiscated by the US. I think that's the scary thing, is that people thought they were holding assets in the form of like US treasuries and US based US based assets. But then when Russia invaded Ukraine, US froze a lot of the assets that Russia held and kicked them out of the SWIFT system. So now people are thinking, oh, geez, imagine if I hold all these things that I think are like good diversification to protect us against like a devaluing currency in our own country. But now if I do something that the US don't like, they can just confiscate it and take it off us. So it led to all these central banks now going and purchasing something that is gives you exposure to the US dollar, because gold is typically priced in US dollars. So you can get exposure to US dollars via gold. But if you own the physical gold and the physical gold inside your country, it can never be confiscated. So I think that's the same thing, is that you could buy paper gold where you own the contract, but who's really going to enforce it if the people that control it all just decide not to give it to you? But if you own the physical gold and it's inside your country, it's a lot harder to get confiscated. So it makes sense what you said. So thanks for sharing, Tom. Increase 50%. Yeah. And well, if they did, and they're one of the biggest holders of US bonds in real problem. So it makes sense. What's that? No, they're doing it for a different reason. They're hedging their bets. So they're buying US debt, but they're also devaluing their country to try bring inflation in, because they've been, once they went to hyperinflation after the war rebuild effort, they've been trying to go and deflate their currency. So they've gone through like decades of deflation, and whilst they were trying to like temper how much it created like this culture in Japan where people didn't keep their money like necessarily in a bank because it was losing value, or they didn't go and buy houses because it was just way too expensive. So they didn't really have like an investing culture because there was no growth in the country through years and years and years of deflation, but they had to do it because price of everything got so crazy. But now for them to try bring in business, you need to see like growth. So at the moment, like for them to keep the interest rates so low is trying to stimulate the economy. And it's just taken years and years and years and years for that to really shift. So they're trying to, they're basically, they know that keep having that ultra easy monetary policy is devaluing their country, but they're trying to make it more attractive for overseas investment. So if they can start to get that up, then they can go leave that investment, but to also protect them, because if you deflate your economy, the cost of everything coming into that country gets more and more expensive because the yen constantly is buying less and less. Like each yen is worth less goods that come in. So basically you're trying to import inflation as well. Now, if there's no growth in wages in Japan, it's going to really just screw over the people, because things are going to get so expensive because they're an island and they're not really self-sufficient by themselves, and their population means it's like they've got to import so much food and energy. So for them to keep the costs down for the population but still attract business investment, they're having to devalue their economy to try attract business investment. But then with also they're buying assets that can insulate the devaluing, and the government can offset some of the costs of the stuff coming in. You know, like when COVID happened and people weren't having jobs and petrol prices went through the roof, and then a lot of the governments put in like a relief tax where they offset, even though oil was costing something like, you know, got up to like what, like over here in the UK, it was over £2, which is like nearly $4. It was £4 a litre. Now the government put in when it was getting crazy, they put in, sorry, $4. There's £2, which is nearly $4. Oil relief tax. So they basically just gave like whatever they were buying the oil for X amount, or petrol country companies were charging this much, but the government was like putting 30p to every dollar or every pound to offset it. And they did the same like Australia. So they could only do that from their own savings. That makes sense? Am I making sense? So whilst the yen are devaluing their currency, using that devalued currency to buy overseas assets, which generate a return, can help them use some of those returns to offset some of the incoming inflation. So what it does is ultimately it's kind of like hopefully they're trying to keep things as status quo. So whilst the yen devalues, it's offset by their overseas assets increasing in value. relative to the yen, and they can use those increased gains in their assets to protect the economy and the people from rising importing inflation. I think it's pretty clever, but they're in a real sticky situation, because if their economy deflates too rapidly, then they might not have enough money to sort of offset projected costs that are incoming for the next few months. If that happens, and then they start to fail to pay their bills, then they get risk of defaulting. But it's not just the risk of defaulting. It's not like they're going to go bankrupt. But if they stop paying bills, then it's going to make the incoming capital more risky. So people that invest in Japan are going to start charging Japan a bit more of a higher premium, because they're less likely to start becoming like a liability to pay back their bills. So what they do is, without actually intervening physically, they will jawbone the currency. And that's where you see them saying, oh, if you do this, we're going to intervene the currency because we hold a lot of government debt. If it gets too high, we'll just unload some US treasuries into the market, and that should oversupply the market initially, and you'll see US dollar devalue just momentarily. It's all connected. See what yen did as well with this war news. Nice little spikes. It's a bit of a shame, because we had sells planned from around 155. That would have been a lovely little move. My Euro US missed as well. That was annoying yesterday. Just missed by 10 pips. I was looking for 107. Price stopped at 1.069. Then dropped down into the support zone. So, did anyone catch that? Nice. Oh yeah, you got this little zone, that order block. Yeah, that'd have been nice. That'd have been like a nice 70 pip move. Yeah, I really thought, being the Euro high, that I thought London would have done it. So it's a shame. Got so close. My targets, my entry's been there since Monday. And I was hoping that we pushed up on Monday morning or Monday to go down. But the real lack of news this week is, this is what I was saying as well on Sunday, that if we don't get the momentum this week was very likely to be a pause week. And then it's next week that we start seeing it drop again. Anyway, these longs are looking much better now. Yeah. Yen's increased in strength. Oh, that was US yen. So yen, yen gaining strength goes down. Yeah, so because yen's always the second half of the pair. What could be easier to explain it on is JXY. So you know the DXY, like the dollar index, and it's an accumulation of various currencies, mostly Euro US, then then I think it might be US yen is the second highest ratio, but like 60% is just built up with Euro US. Then it's US yen, pound US, Euro US, US Canadian, and US Swedish. You've got the Japanese index as well, the yen index. So this is, it's pretty messy chart, but you can see like yen's really struggling, really struggling. But then when it gets like, it's just so beaten down. But what you get is, it's not even showing here. Forget it. Oh, it's not even open. That's why. It's only this dollar index is only open for the American session, so it doesn't have the data. But I wouldn't be surprised that if it did open now, it would have shown a spike up. Yeah, I rarely look at it, but I should see if there's a dollar index that's open the same as like currencies, like all the time, like the dollar index. I thought it would be because it's TVC, but anyway. Yeah. Not sure if it helps like trading so much to a degree. It helps like swing trades and position trades, but like scalping, it doesn't help too much in scalping. It is, yeah. Yeah, I think it comes down to asking yourself how you want to trade in the future. So like in the future, do we still want to be doing like scalping sessions, finding days, trades in the morning? Or is it now just bigger picture, just thinking, I'm not trying to find a trade every day. I'm just trying to, like, my count size is really good. Now it's count size is big enough that I only need to make like 1% a month, because as your account gets bigger, you become much more risk adverse as well. So it's all well and good having like a $20,000, $50,000, $100,000 account and then trying to make, at least 5% a month, at the very least, like 10% a month. Because, if you've got 100K and you're trying to make 10% a month, you're going to need to have, a lot more, like if you have like positions that run a long time, you need to make, to be realistic, you need to make 10% a month. If that's your income. So to have like 10,000 a month is, you need 10% per month. But as your account grows, and let's say you get finally up to like into a few million, now you're only looking to return like 1% to 2% per month. And then it's like, well, what kind of trades do I need for that? I want really safe trades. I don't want to have really volatile sessions. Or you can have volatile sessions, but you don't want to have like volatility in your trade. Yeah, and that's it. I mean, like most of the time, like scalping's fun. I love it. I love it sitting here and watching this, but I can only do it for like a couple of hours. And if the market is moving and it's frustrating, because it's just like, the hour that we choose happens to be like the London Open. It's so easy for you to come in London Open, take 1, 2, 3, 4 trades. Price is not really doing what you want. And then by the time you get to when the market actually moves, which we can't predict when it's going to move, we can have a look and say like, oh, there's news in the New York session, or there's news like later on, or maybe there's no news this week, which we've had. There's basically been any news. We get the news. So from Monday, like Tuesday, not much news. Wednesday, not much news. Thursday, not much news. Market's been crap. The only time it's actually moved when we had US retail sales on Monday, and then when we had bloody missiles going on Friday. The rest of the time it's been pretty average. So if we came to the market the same time every day, which we should, and analyzing the same one or two pairs, but if we waste all our bullets when the market's not moving, and then not just plan from watching to say, like, where are the best levels? Best levels are going to be, using the higher time frame, finding sort of liquidity, best levels. This is a great level. Here's going to be a nice level. Here's obviously going to be, an interesting level because we'll start ranging. Do we want to waste all our bullets in the 4-hour picture inside of here? Do we want to waste our bullets right here? Like, even in this range, do I want to keep on hoping that we get that breakout when New York session might go like that? And then I've put all my eggs in the basket, seeing that if we can just push straight up, give it a shot for sure. But on the swing trade idea, it's not so much about your entry if you're expecting price to push up. It's more about the idea, but then just being prepared that price can do the unexpected whilst they build liquidity during the day. And that's what's annoying, is that we're conditioned to wanting things now because we got everything on demand. And the market knows that, that our timing is mostly off. Price just goes and goes and goes and goes and goes. It pushes you to sleep, creates all this liquidity, then goes boop. And if you got an entry anytime during this 5-hour period during London, and your target is, you're targeting like a session high or something, it doesn't matter what time you entered. At some stage, price is going to come back to your entry or put you in drawdown. And if you haven't factored in an ability to hold necessarily drawdown, you don't want to have to hold drawdown. It sucks having to hold drawdown. It's not a good feeling. But if you've over leveraged to the point that you can't afford price to go down before it goes up, then it's going to be really hard to hold trades that do become good winners. Based on the 4-hour daily, it's a bit easier to trade. It's super slow, super boring, but it's a bit easier to trade. But you're going to be sacrificing a lot of risk reward is going to be far lower. So that's why I don't think it's really appealing to a lot of people. Struggling, man, to get out above here. What do I think of trading strategy uses the New York midnight to New York 6 a.m. The high and low of that range becomes the basis for the bias for the NY AM session. That's kind of what, well, it's a little bit different to what I do, but that's what I use Asian session as. But I use a much bigger range. Some people use, like midnight, NY 6 a.m. So that's from NY midnight. Oh, wait, NY midnight. That is... NY midnight is 5 in the morning. So that's from here to New York 6 a.m. That's a big window. I'll be like this. Yeah. In theory, it's what I use the Asian session for, but it's just used in a different point in time. So I don't know. I don't really have too many thoughts on it. Well, a bit of a bomber session. Really tricky to trade. Yeah. Really annoying because you wake up and the Asian session is massive. So volatility is, oh, you've gone long on German live? Nice. Yeah, everything's gone, like even oil, all the way up and then all the way back down. So you create this huge range. So whatever you do today, Freaky Friday, be very careful. Be very, very careful. Don't do anything that you're going to ruin your weekend. So even this 45-minute candle, man, bloody hell. Anyway, Zoomers, stay on. YouTube, we're going to finish up. So 9 o'clock. Yeah. So as long as we're not really closing back below here, I don't want to hold too much. So probably going to have to consider just seeing what this next candle is going to do. But I really wanted to see that hour candle push up. So I guess I'm going to have to watch this. Otherwise, I might just have to close out. But we'll see. I'm not going to be risking very much today. I don't like the price action. It's just not a day. The day's kind of sucky. Alrighty. YouTube, appreciate you guys. Be careful. Be careful today. We've got a lot of we don't have much news, and we've got a lot of geopolitical tensions, but even the political tensions aren't very clear what's going on. So Israel attacked, but then Iran said it wasn't no big deal, which is really strange. So I expect the unexpected today. So you guys have a good weekend. Zoomers, stay on. We'll have a little chat. And yeah. YouTube streams. I'll see you guys next week. Okay. See ya.